Welcome to Money Talk. I'm Zachary Bouck, Chief Investment Officer and Partner at Denver Wealth Management. Today we're talking about Federal Reserve policy and what to do if we do get inflation. The Federal Reserve pledged to support the economic recovery by setting a higher bar to raise interest rates and by signaling it expected to hold rates near zero for at least 3 more years. In the past, they had preemptively raised interest rates to try and head off inflation. The Federal Reserve said they're not going to do that anymore. And in new projections released Wednesday, all 17 of the officials who participated in the meeting said they expect to keep rates at zero through the end of 2021, and 13 projected rates would stay at zero through 2023. So basically what the Fed has done is they've set an enormously high bar for raising rates. In the past, they've kind of had this dual mandate. We need to keep inflation around 2%, and we want to get as close to full employment as possible. So that's why they call it a dual mandate. They had to balance those two roles. In a pretty substantial change to their policy, they're saying we're now going to put a higher weight on keeping the U.S. economy at full employment than heading off inflation. So that's a big deal to you as an investor. So what does this mean for an investor? Well, if we get inflation, which, by the way, there's no guarantee we will. If we do get inflation, what that means is of the 3 asset classes, which have pricing power. If you own a rental house, it's pretty easy to raise the rate of rent. So that's something that you have pricing power. Real estate typically does well with inflation. In a stock investment, let's say you own Coca-Cola, if inflation goes up 10%, it's not too hard to raise the price of your soda pops 10%. And if you own fixed income, so let's say you own a bond that's paying you 3% for the next 10 years, that's where inflation can really hurt you because you can't increase your bond payment. You've locked in that 3% inflation for 10 years. So if we do get inflation, which is the signal the Fed is telling us is they're going to allow inflation, it's a good time to be an equity investor, it's a good time to be a real estate investor, and it's a challenging time to be a fixed income investor. So for retirees where fixed income is a very important part of your portfolio, you have to be careful about the types of things that you own. You can own inflation protection securities, you can own higher yielding debt to try and offset inflation, or you can just accept that your bonds aren't going to pay you very much. So that's one of the things we're working on at Denver Wealth Management is what is our strategy for if we do get inflation, because the Federal Reserve seems to certainly be predicting that they will allow some. So if you want us to take a look at your portfolio, see if you're prepared for inflation or deflation, we're happy to do that. But in the meantime, take a look at what you own and make sure it's resilient if we do get that inflation.